Hello, this is Dakota Grady with the Your Money Hour podcast. Welcome to the show, you all. Today I'm going to talk about rainy days. What do I mean by rainy days? I'm talking about having a rainy day fund. Why is that so important? Today we're going to talk about the what, why, and how of having a rainy day fund. According to the Federal Reserve, which is our nation's decision maker in terms of our monetary policy, basically how money is issued as well as credit and how interest rates are regulated in our country so people can have access to capital, in short. Well, according to the Federal Reserve, 39% of Americans cannot afford or won't be able to pay a $400 unexpected expense. Yes, that's right. People are struggling to pay $400 for an expense that's unexpected. Well, COVID-19 may be contributing to that, but this stat came before COVID-19, so people were struggling with paying things that were unexpected, such as a $400 expense before the pandemic occurred. So what is a rainy day fund? Why should you have one, and how do you create one? Well, let me tell you some stories before we get started. I've been having a rainy day fund for many years. A rainy day fund is basically savings for rainy days. Things are going to happen that are unexpected, right? So you need something in place so that you can be able to weather the storm. In Tennessee, Nashville area, there was a flood in 2010 that flooded the city. In 2020, there were tornadoes in Nashville, Tennessee as well. So that could be a rainy day. Or what if you lost your job? You had to have an unexpected emergency surgery? Or if somebody stole your car? So a rainy day fund is simply savings for things that are not expected to happen. You don't know when they're going to happen, and you don't know what that it may be. So having savings is very, very important, especially now with the pandemic, with the unemployment amounts being reduced, and also people not making savings a priority. In fact, according to Northwestern Mutual, they did research and it said that 15% of Americans don't have anything saved for retirement. That's saved for another discussion, but the whole point is having savings is important. So why do you need to have savings? I mentioned some earlier. Floods, say things that are unexpected, such as weather patterns, disasters, job losses, surgeries that are unexpected. For me, I'll share some of my stories. One of the stories is a car being stolen. When I was back in South Carolina, I am here now, but in 2008, I was up late, which I normally am. I was using the computer, and the thing that happened was I heard a strange noise outside, so I went out to look out the window. I didn't see anything suspicious, so I continued to work on the computer. The next morning when I was going to work, my car was missing. So I looked around and called my wife on the phone and said, "Honey, have you seen my car?" She said, "No." Well, I looked on the ground, I saw some glass. And I said to myself, man, somebody stole my car. That's right, somebody stole my car. It was a 1985 Delta Oldsmobile 88. If you don't know what kind of car that is, look it up. It's a big car like the Titanic. In essence, it was a huge car. Gas guzzler, but it was a nice looking car. In fact, I had just bought some rotors to have my brakes replaced. I left them on the floorboard and I left money in the glove box. So whoever stole my car had new parts and they had money to joyride on my dime. So word to the wise, a word from the wise, don't leave money in your glove box. That was one scenario. How did I bounce back from that car being stolen? I had money saved. I had about $1,000 saved, and I bought a new used car with cash. Fast forward to Oklahoma. My wife and I moved to Oklahoma for about a year, and during that time, we lived in a place where we had limited parking. So one day I parked on the side of the building where I couldn't see my car. Again, next morning when I went to go to work, my car was still there, thankfully, but when I opened the door, things in my car were shuffled around. So when I went to go start the car, I could not start the car. Why? Because someone had destroyed my ignition switch. That's right, somebody tried to steal my car again. This time they were unsuccessful. I filed a police report, and the police told me the person who tried to steal my car was a rookie, because my car was a 1996 Honda Civic. He said that the car could have easily been taken, but whoever was trying to steal my car was a rookie. Thankfully, I didn't have my car stolen. What I did was I put an alarm in my car. I got my ignition switch replaced, and we moved to Tennessee. Third scenario. Well, how did I get those things replaced on my car? I ran a day fund. I paid cash for the car to be replaced with the ignition switch, as well as the alarm in my car. Oh, by the way, we did move with cash as well. We moved using cash. The last scenario that I can give you was last January. I had just launched my book, Financial Hope, Principles for a Prosperous Financial Future. And I was at my first book tour in Nashville, Tennessee at Akebalon Images. Akebalon Images is near Tennessee State University, actually, TSU. So after the event, I felt fine, but later that night, I had pain in my side. The pain had come and gone in the past, but this time it was very, very relentless. It would not go away. So my wife took me to the urgent care the next morning, and the doctor said it could be my appendix, and he urged me to go to the emergency room. So I went to the ER that day, and it was confirmed that my appendix needed to be removed. That's right, I had to have my appendix removed that day. Have you had your appendix removed? What would you do if you had that happen to you? How would you pay for that unexpected event? What if you lost your job? Been there, done that. In fact, when my wife moved to Oklahoma from South Carolina, she moved there by herself. So I stayed in South Carolina to go to school and go to work. That was the plan, at least. Well, when I decided to go to Oklahoma, my wife lost her job. So I left 2 jobs in South Carolina to go be with my wife, and I didn't have a job at the time. So we didn't have any employment. But we had money saved because we knew that life was going to happen to us. Yes, job losses. What if you have a child who's playing on a trampoline and she falls off and breaks her arm? Would you have the money to pay for that expense? Would you or would you not? What would you do? Borrow the money? Right. You would do, if you don't have money to save, you would probably borrow the money to take her to the emergency room and get her some care that she needed. Again, what if you lost your job? What if you had someone steal your car? Right? What would you do in that situation? Would you be a part of the 39% of Americans who don't have the money to pay for a $400 expense? Or would you be a part of the people who had the money saved? Right. So today, how do you go from zero savings to money in the bank for rainy days? Well, I recommend first getting a money plan in place. That's right, get your money plan. I talked about that in the last episode. So if you haven't heard the last episode about having a money plan, I want to encourage you to go back and listen to it so you can understand what the money plan does for you. So first, do your money plan, then have a rainy day fund of at least $500 to $1,500 in a savings account. Why a savings account? Because that money is for you to use for rainy days, not to go on vacation with, for play money, to go get the big screen TV or the new gadget or shoes. It is for things that are going to happen to you that you don't know about, that you don't plan for. So I encourage you to have that rainy day fund of $500 to $1,500 in a savings account with your credit union or a bank, or maybe even get a money market account, which basically you can get that with a bank or either a financial institution. So you can have money easily accessible to you in the event of a rainy day. Because you need to have that in place. So that's the why. Why do you have a rainy day fund? For life. Things you don't think are going to happen, and they do happen. So how do you save for a rainy day fund? First, you must have a mentality of savings. You must make savings important to you. Put that savings goal in your money plan. That's right. Put the savings goal in your money plan. That means you're intentional about savings for rainy days. If you don't be intentional about this process of saving money, then you won't have money saved. So if you want to have an umbrella for the rain, for the flood, for the tornado, for the storms of life, I encourage you to make savings a priority, make it important to you. It's important to me, but I want to help you make savings important to you. Because it's not an issue, a matter of if things are going to happen. The question is, when are they going to happen? And when they do happen, will you be prepared? I hope so. After this podcast, I hope you're prepared. A saving between, again, $500 to $1,500 in a savings account that you can easily access. Don't put it in your drawer at home or under your mattress. Put it in the bank. Leave it alone and let it be there. Now, some of you may be saying, Dakota, but that's money that I could be using for a car payment or going on vacation or whatever it may be. Well, I want to challenge you to change your thinking and say, this money is for me to take care of my family or myself, if you're single, if something happens that is unexpected. So I want to encourage you to change your thinking and make this a priority, because my wife and I realized that when you have money in the bank, things don't happen that often, but when they do, you pay the money for the event and you replenish it meaning your rainy day fund, and life keeps going. But what if you don't have the money and something happens unexpectedly? What are you going to do? Borrow money from your credit card, if you have credit cards? Go get a loan from the bank, a payday loan, or you may get a loan from a family member. The whole point is you're going back to borrow. This process teaches you not to depend on credit. That's right, because I want you to use cash for life. That's right, I said that. When you borrow money, you're putting yourself at risk, whether you borrow money for a personal matter or a business matter. You're adding risk to your life. That's right, you're adding risk to your life. We'll talk about debt in a different episode, but I want to encourage you all to use cash from this day forward. Starting with the rainy day fund of $500 to $1,500. And eventually, once you get out of debt, that's right, when you get out of debt, you want to increase that rainy day fund from that mini rainy day fund to a mega rainy day fund of 3 to 9 months of living expenses. That's right, because when you get a house, you need that big rainy day fund because things are going to need to be replaced, such as a roof, a furnace, a washer and dryer, maybe even a car. But things that are bigger purchases will need to be purchased with a big rainy day fund. But for now, I want you to do your mini rainy day fund so that you can be prepared for storms that will come in life. So what is rainy day fund? You know what it is now. You know why you need one and how. How do you save for one? Again, you must make sure that saving is important to you. You can save money by saying, I want to save this particular amount of money by setting a goal. You work, say whether you have a business or you have a job, set that goal and put the money in the bank when you get paid. So you must be intentional about savings, because if you don't, it won't happen. You can sell something or extra, maybe sort of side hustle. You can do something to make more income if you don't have the money to save. Create opportunities for yourself so that you can make more money to be able to create a rainy day fund. That's the how part right there. So I want to encourage you all to now reflect on what we talked about in this process and give yourself an hour to reflect, set a goal, a plan to make this process happen for you. Thank you all for joining me for the Your Money Hour podcast. And until next time, take care.